All right, regular listeners will know that we like a bit of proxy data on the Business Breakfast, and we like other people who do too. So you can imagine our delight when we came across a LinkedIn post from one chief economist explaining how and why his bank was making use of different, sometimes unconventional indicators to track what the UAE economy is doing. Very pleased to be joined by Simon Williams, chief economist for Central and Eastern Europe, the Middle East and Africa at HSBC. Simon, good morning.
Good morning.
We've guessed what the CEEEMEEEA stands for. Secretly, we're just calling you everything but the States.
I could cope with that.
Okay, let's start by why you look at all of these different data sets, because they are wide-ranging, everything from parking spaces to maths results.
We do the best that we can. I think there has been an improvement in the kind of conventional data that the UAE produces, but it's still, well, there are still some quite significant gaps in that data as well. The GDP data is, 6 months old now. It's not quite as detailed as we'd like. So we're trying to gauge not just broad activity, but I guess also the momentum running through the cycle. Yes, we look far and wide. That's everything from the regular high frequency indicators, things like the PMI. We now have 4 PMIs, 5 PMIs across the UAE, but also trying to pick up markers of underlying economic activities. That's everything with the demographic data, what's happening with utility demand, just to try to get a sense of where we are in that macro cycle.
What makes a good economic indicator? How do you decide to use one set of numbers and not another?
We cast the net as wide as we possibly can. And we're trying to pick out, I guess, a number of things. The level of activity that we're seeing, the sense of where the momentum is rising or it's falling, which sectors we think are doing particularly well. When I look across those indicators, as you say, we pulled together for this report, I can see strong gains in domestic demand. Those demographics are still looking pretty good. Sentiment has dropped on where it was, but it's still quite firm. What I really like is that export orientation of so much of the economy. We're talking about the export of financial services, of goods as well, the travel and tourism sector. There's real momentum running through those parts of the economy.
You're on your second tour here in the UAE, and this time there's an awful lot more data in the form of listed companies that need to tell us what they're doing. Does that make your job easier?
It does make my life a lot easier, because when companies list, or the same way as when governments issue debt, they have to be more transparent. They have to give bondholders, they have to give shareholders data about what's happening in the domestic economy. So as you say, things like the parking data now being available, being able to track what's happening with SAMIC, with taxi demand as well. All of this starts to give us a feel, an intuitive sense of what's actually happening in the domestic economy.
Well, I was really interested, and you've come out with a UAE report that does exactly this, has a look at different and varied data sets to take the pulse of macro trends. I was interested in which ones you picked, particularly on the education front. What does kids in school and how well they're doing tell us about an economy?
Well, again, I think that report overall has, I'm slightly embarrassed to admit, over 70 charts. I think the post that went up on LinkedIn only has a dozen or so. That was just a selection of what we've put together. But I guess what we're trying to show in that selection of data is both these near-term indicators, what we're seeing with the cycle, but I'm also trying to bring out the kind of structural changes that are taking place as well. As you say, this is my second tour here in the UAE, 10 years in Dubai, 10 years in London. I moved back a year or so ago. And I think what stands out for me has been some of the big upgrades. There's been the kind of quality of economy that the UAE as a whole, Dubai in particular, now represents. The improvement in infrastructure, the digitization of just about everything out there. But for the long term, what's happening with education is absolutely key. And what we've pulled out in this report is some of the internationally comparable tests that children in the UAE take, looking at literacy and numeracy skills, and there have been some very significant improvements. The scores here are the strongest anywhere in the Middle East, above the international average. When I see those kinds of gains in educational attainment, the kind of improvement in human capital that comes with it, all feeds through into a long-term story as well as a near-term story that's pretty constructive.
Yeah, I mean, I was going to say, what do Tom's kids' math scores have to do with GDP?
Again, we're talking about potential here. We're trying to understand the kind of value the economy is capable of creating, kind of productivity gains that we can hope for. And education scores are certainly one part of that. And again, the kind of themes that we're trying to pull through, it's still difficult for the data that we can get hold of. Is not just the shifts in demographics, the gain in the population, but the greater stability of that population, a drop off in the churn rate. So if Tom's kids are achieving well in school, the chances are that the chances have increased that they'll be coming back to be active participants in the economy in a way that wasn't the case last time I was living here.
The school seats, which is another thing that you look at, school enrolments, because people obviously can have no kids, 1 kid, 2 kid, 3 kid, etc., doesn't necessarily give us population numbers, but it tells us a lot about the young population. Why is that important?
It all feeds through into the same kind of story. Again, we pick out this fairly eclectic set of data because each gives us one piece in the puzzle to try to understand how the economy is evolving. So yes, there has been demographic growth. I look at the broad markers of the age of that population, and we can see it is very youthful indeed, and that gain in the demand for school places, the increase in the school population speaks to a population which is at that kind of sweet spot in terms of wage growth, in terms of consumption growth, and that feeds through into what we think is a strong near-term story.
How do you deal with the known unknowns? The things like when you look at some of those listed companies, you're dealing with some particular expatriatisms, such as having more than one mobile phone or keeping a mobile phone subscription active even though you've left the country.
With difficulty, we can't. In the end, all we can do is think of those metrics as being consistent measures of something. And we can pick out the trend that we see in that measure and try to understand, is this a cycle which is gaining pace, which is losing pace, or as is the case, I think now in the UAE, I sense we're at cruise speed. This isn't an economy which is accelerating anymore, but it's certainly an economy that's growing well, and where the levels of activity are materially higher than they were certainly pre-COVID. We've got a non-oil economy which is probably 25 percentage points bigger than it was before the pandemic hit. And on a global basis, let alone a regional basis, there's very few places that can actually match that kind of gain activity. Well,
look, we're going to dig into what your report actually says now that we've had a chat about where the numbers have come from. It is titled "The United Arab Emirates: A Lot Still to Like," which speaks to Simon's sense of humour, but I'm interested in what all of these numbers actually tell you, the picture that they paint. We have a chief economist in the studio this morning, Simon Williams, chief economist for Central Eastern Europe, Middle East and Africa at HSBC. He's got a new report about the UAE, and as luck would have it, we have him here on Fed Day as well. Let's have a look at this research report that you and your global team have put out. The United Arab Emirates: A Lot Still to Like, you've headlined it. You say the cycle is moderating. How so?
It is moderating. I mean, cycles do moderate as they mature. You have that acceleration phase, and really since COVID, there has been a period of really rapid gains in the pace of economic activity. I sense things are moderating a little now, but we'll talk about a moderation of the pace of growth. This is still an economy which is expanding. It's not quite as quickly as it was before. And you can see that in some of the data that we tried to highlight in that report. The PMI numbers are still expansionary, but off the kind of highs that we had before. The tourism market is still growing. If we look at sort of the 12-month total, we're looking at a tourism market that's growing at 10%, not at 20% anymore. Sentiment is still really strong, but it's definitely off the kind of highs we had early cycle. So it's a good story. It's a robust story, just not growing quite as quickly as it was earlier in the cycle.
Some people will listen to that and just hear slower. Is there a worry attached to it at all?
It is difficult to hold both of those ideas together at the same time. This is an economy which is most definitely still expanding, but I would expect the pace at which that growth is coming through to start to moderate as the cycle moves on. But no, we're still looking at an overall economy that's growing around sort of 4.5%, I think, over the course of this year and next year. And those growth drivers are pretty broad. Domestic demand, here we're talking about consumption gains driven in part by ongoing increases in the population, but also big increases in investment as well. That feeds through into the strong domestic demand story. And I think what's striking is that in a global in a global environment which is so heavy, the export orientated parts of the economy are continuing to do well as well, particularly the export of services, financial services, trade services as well.
As the population gets bigger, does what the economy needs to do to keep it afloat change?
It's difficult, I think, particularly in somewhere like the EU, especially in Dubai, to calibrate the increases of demand, of supply for infrastructure goods, for real estate goods in particular, to meet the changes in demand. Because you create a job in the UAE, it's a pretty good chance you bring a whole new person into the economy with all the demand that brings. That's a very different dynamic to the kind of shifts in demand that you see in other economies. But I think what we're trying to stress in this piece, what we spend a lot of time talking about, isn't just the kind of cyclical drivers that we see. Is there something more substantial lying beneath it? Are there structural changes that allow the UAE as a whole to be a more productive economy, to generate value over the long term, as well as for now? And some of the big changes that we've seen in policy formation in those structural framings for the economy have moved on a long way in the last 5 years. I think that's what's feeding through into this strong growth story.
Well, our growth story is going to be attached to the US growth story in a way, dependent on what the Fed decides to do with interest rates. It is Fed Day. We conveniently have you sitting here in the studio. What are you expecting to see and hear from this meeting?
For the Fed, in terms of the actual decision, I don't think such a big deal. The Fed's going to be on hold. Is on hold in January. They got 100 bips in the last quarter of last year. I think it's almost certain that rates won't move today. What we'll be looking at very closely is the Fed statement. How do they begin to change their economic forecasts? And again, I think it's too early to expect to see big changes as a result of some of the shifts in US policy since the inauguration. But we do think you may see some tweaks around the edges, and they're likely to be negative tweaks. We think the growth forecasts may come down a little. The inflation forecast may go up a little. We don't think you'll see a shift in the Fed dots. The median expectation for where rates will settle, we don't think will move. It's too early for that. But yes, the market will be looking to see how the Fed's thinking about growth and inflation. And obviously we have a press conference with today's meeting as well. And the tone of the comments that come from Powell will be very important too.
Are you worried about the trade war that's brewing?
You have to be worried about anything which begins to disrupt the flow of global goods and of global capital as well, and the kind of market pressures that you've seen over the last few weeks are a reflection of the increased uncertainty running through that global backdrop. So absolutely, we're trying to think through how that shift in US policy, but also changes we're seeing in China and in Europe as well, feed through into our global story. No, the Fed is on hold today. We do think there are likely to be more Fed cuts coming through over the second half of the year, so that will offer some monetary relief for the UAE economy. But the uncertainties running through that growth inflation mix are much more pronounced than they were just a few weeks ago, as we try to understand now where the focus of this new US administration's policy is likely to sit, and how forcefully those policy initiatives are going to be pursued. And that's not just tariffs, and that's changes in government structure, but also changes in how the US labour market works.
We have to leave it there. Unfortunately, it is 8 o'clock on the dot. Simon Williams, Chief Economist for this region and several others at HSBC. Thank you for your time.
Thank you.